Financial institutions. Some people go to financial institutions in search of a safe place to keep their money. Others want to borrow money to buy a house or car, start a business, pay for college, or do other things that requires borrowing money. A bank is a business that sells financial services such as car loans, home mortgage loans, business loans, checking accounts, credit card services, certificate of deposits, and individual retirement accounts. Financial institutions that accept savings from depositors and uses those funds primarily to make loans to home buyers. They accept deposits into saving accounts, pay interest on these accounts, and make loans to buyers of residential homes. Savings and loans associations do not make business loans. A credit union is a nonprofit financial institution that is owned and operated entirely by its members. Credit unions provide financial services for their members, including savings and lending. A credit union makes a loan to its members at low interest rates. Large organizations and companies may organize credit unions for their members and employees. To join a credit union, a person must ordinarily belong to a participating organization such as a college alumni association or a labor union. When a person deposits money in a credit union, he or she becomes a member of the shareholder of the union because the deposit is considered partial ownership in the credit union. Earnings that are paid out to members are called dividends. A commercial bank basically deals with businesses. It operates similar to most financial institutions. Excess reserves from business deposits are loaned to other businesses who deposit the money in their bank accounts. The bank continues to pay interest on deposits and earns interests on their loans. A payday loan is a short-term loan that must be paid in full when the borrower receives their next paycheck. The loan amounts are typically small and are based on how much money the borrower grosses each pay period. These loans include high interest rates that usually causes the borrowers to acquire additional debt if the loan is not paid back on time. The check cashing company is the fastest growing financial service. It offers check cashing to people who do not have traditional bank accounts. However, a customer must pay for this service. The fee is usually a percentage of the check cashed. Some companies do not cash personal checks, and some offer direct deposit where money is loaded into an ATM card and picked up at the check cashing store. There are many rules and regulations that govern this business, one of which is that people who provide this service must obtain a license. The Federal Deposit Insurance Corporation insures accounts in banks and savings and loans associations. The FDIC protects up to $250,000 of your funds for savings and checking accounts, certificate of deposits, or money markets, and up to $250,000 for retirement accounts such as IRAs and KIOG accounts. The National Credit Union Association is the independent federal agency that charters and supervises federal credit unions. The NCUA operates the National Credit Union Share Insurance Fund, NCUSIF, insuring members for up to $250,000. Before you open an account with a financial institution, be sure that it is insured by one of these federally backed agencies. These logos must prominently be displayed on the counters. What do financial institutions do to make money and stay in business? They get it from people who open accounts and deposit money with them. Without these deposits, financial institutions would have little or no money to lend. Your savings are combined with savings from others to form a big pool of money, and then used to make loans. While the interest is earned on checking and savings accounts, a greater interest rate is charged on the loan. Financial institutions earn a profit when the interest charged on the loan exceeds the amount paid on the deposits. That's how they make money and stay in business. Even though there are some differences between banks, saving and loans, and credit unions, they offer many of the same services. Banks can offer car loans, saving institutions can make commercial loans, and credit unions can offer mortgages. As a consumer, learn the services offered by each type of financial institution. Do some comparison shopping, and then decide which type best meets your needs.